the Fed's in a rock and a hard place, and gold senses that, and it's forecasting higher prices, which really isn't higher price. I mean, it's a higher price, but what it really means is the dollar is losing purchasing power. Gold is a constant. An ounce of gold is an ounce of gold. That doesn't change. It changes the price. So why is the price changing? Because the dollar is deteriorating. I think that's inevitable, regardless of what the Fed does with interest rates. But it's a really simple equation. All fiat fails. Does the dollar go to zero and it's going to go away? And all? No, the dollar will be here. But what's the purchasing power going to be? And the problem is the deterioration of the dollar is accelerating. And that's what scares people.
David Morgan of the Morgan Report initially forecasted $2,500 in gold and $30 in silver for this year. While silver has met this forecast, gold has yet to reach the $2,500 mark. Morgan does not expect gold to hit $3,000 within the year, but he maintains a positive outlook for gold prices due to persistent geopolitical risks and other economic factors. Morgan notes that the rising price of gold indicates the dollar's declining purchasing power rather than an intrinsic change in gold's value. He believes that the dollar's value's deterioration is accelerating, posing a long-term concern. This viewpoint aligns with the broader trend of seeing any decline in gold prices as a buying opportunity, likely to remain limited in scope. The firming expectations that the Federal Reserve will cut interest rates later this year reinforce the near-term positive outlook for gold. Recent disappointing U.S. macroeconomic data and persistent geopolitical risks support prospects for further appreciation of gold prices. The Fed's anticipated rate cuts are dragging the U.S. dollar to near two-month lows, providing a tailwind for the non-yielding yellow metal. On the other hand, silver has performed well, meeting Morgan's forecast of $30. Morgan predicts silver will likely trade between $30 and $32 for some time. He anticipates that silver will eventually break through this range, with $33 being a significant level due to the lack of substantial resistance above it. Despite its strength, silver experienced a decline below the psychological support of $30 during Tuesday's European session. This weakening of the white metal occurred as the U.S. dollar rebounded amid uncertainty ahead of the United States non-farm payrolls data for May. This data will provide insights into whether the Federal Reserve will lower key borrowing rates from their current levels in the upcoming September meeting. Join us as we delve into David Morgan's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Probably going to hit a trading range. We're probably going to trade between 30-ish and 32 for a while, and it'll go back and forth. And this is my best guess. I mean, if you interview me 10 days from now, I might have changed my mind based on new data or some new announcement about more solar panels or something in the silver world. But regardless, normally we'll see a new trading range, and then we'll break through that to the upside. And 33 is not a magic number, but it's a good rule of thumb. As you said, above that, there really is not very much resistance, which means any new buying will take it higher and higher and higher. And what do I expect for the rest of 2024? I'm going to be conservative, Charlotte. I'm going to say I think we'll still be in the 30s and probably in the mid 30s. I don't really think silver is going to be in the 40s by the end of the year. People will make arguments it'll be 50, and it could be. But I'm going to remain conservative. My call for this year, before any real bullishness in silver and gold was just starting to make some pretty good moves, was $2,500 gold and $30 silver. And surprisingly, my silver call is here already, and gold has not quite made it to 2,500. And that isn't like the average price. That's kind of the high range. But again, I hope I'm wrong. I hope gold's well over that, and silver's making new nominal highs for what I wish would happen. But what do I believe will happen? I don't think you're going to see $3,000 gold this year. I don't think you're going to see $40. Gold moves opposite the stock market. Does it move opposite the U.S. dollar? Yes, but it's actually more inversely correlated to the stock market. So now let's think about that. The stock market's been making new highs, and yet gold's been making. If they're opposite, and they are, that's correlation. I mean, not 100%. Nothing's correlated 100%. That says that gold is really strong, because normally in a strong stock market, it doesn't do this well. So even though the price is nominally high, and that's good, it's probably not nearly as high as it would be in a weak stock market environment. On the interest rate things, I'm a bit of a maverick. Really, to me, and time has shown this. Interest rates do matter. Absolutely. It's the cost of what we call money. But you really don't get it to affect gold until the interest rate is equal to or greater than the true inflation rate. And the true inflation rate, basis John Williams, shadowstats.com, I don't know the number. I listened to a recent interview, forget the number. I'll say 10%. And we're using a 5.5% yield on the bond right now on the near term. Cutting interest rates will help the gold market. They cut them here. But the way to really, move gold down would be to move interest rates even higher. But they're not. Could interest rates move higher? I'll be maverick again and say they could, but nothing monumental in my view. I mean, could go a half of, 500 basis points. Could it go full basis point and go another percent higher? Could. Will it get to 10%? I really doubt it because there's too many variables that depend on the cost of money, and one of them is the interest on the national debt. You just get it too high, you'll collapse the economy. The Fed's in a rock and a hard place, and gold senses that, and it's forecasting higher prices, which really isn't higher price. I mean, it's a higher price, but what it really means is the dollar is losing purchasing power because gold is a constant. An ounce of gold is an ounce of gold. That doesn't change. It changes the price. So why is the price changing? Because the dollar is deteriorating. I think that's inevitable, regardless of what the Fed does with interest rates. It's what, I and so many others have predicted that you interview, and you've gotten, some really bright people throughout the years and continue to interview them. But it's a really simple equation. All fiat fails. And does the dollar go to zero and it's going to go away? And all? No, the dollar will be here. But what's the purchasing power going to be? And the problem is the deterioration of the dollar is accelerating. And that's what scares me.
DavidMorgan highlights that long-term trends in the silver market are more bullish than in a long time. This optimism is driven by rising industrial demand and favorable market dynamics. Many traders who missed the recent surge in gold and silver prices are now eagerly watching for opportunities to buy during price dips. Precious metals bulls argue that the upward trend could continue with prices no longer excessively high. This outlook is supported by ongoing central bank gold purchases and the role of precious metals as an inflation hedge, making them attractive to investors seeking stability amid economic uncertainties. Morgan points out that if the Chinese retail market begins to engage heavily in silver investment, it could significantly increase prices. China's large population and market enthusiasm could substantially impact global silver prices. This scenario is becoming increasingly likely as Chinese silver imports surge in the coming weeks. Traders are poised to take advantage of a spike in demand that has driven local prices well above the international market. Let's get back to the interview.
I think I made the right call on gold, and here's the call on silver. It is a breakout. I have what's called the Morgan rule. My premium members know it because I use it in some of the updates I do for the membership. But it's not infallible, but it's a high probability. So whenever we get a new level, we look at the market to go above that level. It must go above that level 3 days in a row. It can go below the level during day, but it has to remain above that level on OCO, on close only, which is a trading term. So if you have those things, 3 days in a row, above average volume, over a new hurdle, you have about an 85% probability that the trend will continue. That's a very high probability. And it works 100% of the time? No, it works by 85% of the time. So we had that with the $30 level in silver. We got up to, in the last 5 days, traded over 32. Now we're just over 30. 30 has held for the last 2 days, and it could dip below it. I mean, we could see it could go below it. I mean, I admit that we don't know for certain, but we've certainly breached the $30 level significantly enough and for long enough of a time for that to be what I call psychological confirmation as well, which means that people get the idea now that silver's traded at $30. Silver is acting strong, and yet if you look at some of the features you would normally expect to show strength, they're not there. What I mean by that is the retail market doesn't believe this move. In fact, I just talked to the third dealer today, and they're getting more sells than buybacks. So a lot of people that bought at 25 with a high premium and they paid 30 or whatever, saying, I could get 30 for it on a sale or 31 or what it is, whatever. So that wouldn't add to, a higher price. In fact, a lot of selling would take the price down. Obviously not doing that. The main factor is two things. The amount of inaccuracies and how much was used in solar last year, I think, is weighing on the solar industry. And so there's that. And then on top of that, the futures market continues to go higher and higher, and a lot of that has to do with the Shanghai Futures Exchange, the SFE, because there's an arbitrage available between the price of silver on the COMEX and the price of silver in Shanghai, and it's significant. Now, it costs to play that arb in the physical world. You've got to buy it at the COMEX, and now you got a lower price, maybe $2 an ounce, $3 an ounce. That's a heck of a spread, but now you've got to ship it or take an airplane or something. So there's transportation costs to get the physical there. So it's done synthetically, which means in the paper markets. But the point being is they are setting records in the Shanghai Futures Exchange, and most people don't pay attention to it or know where to look. And I was a little hesitant to jump on the bandwagon. Ross Norman was about the first one to write about it. And I, get a lot of information from a lot of different sources, and some are more trustworthy than others, blah, blah. But this was okay. So I started looking at it hard, and yeah, it's been verified time and time again the last week or two that there's something going on. And I'll stick my neck out. I was conservative on the last segment. I'll be a little more bold this time. If the Chinese retail market has caught on to the silver market, I mean, you've got 1.4 billion people. Now, not all of those people are going to be silver investors, I realize. But the point is, there's a lot of Chinese, and they love the markets. So that's really the driver: solar and Chinese, and also people in the know, people that get the studies on silver, that really look at the market hard and see, what the future looks like as far as the major trends. The major trends are more bullish than I've seen in a long time.
Considering the expectation that the Federal Reserve will cut interest rates later this year, how might this anticipated policy change influence gold prices in the near term? And what are the broader implications for investors if the US dollar continues to weaken due to these rate adjustments? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.